A big management shakeup at RIM. Research in Motion's co-CEOs resign. And Apache buys Cordillera Energy Partners for $2.8 billion. And Greece is trying to come to an agreement with private bondholders, needing them to take a big loss to secure 130 billion euros more in bailout funds. I'm Alix, and the Morning Call starts right now. Good morning. Happy Monday, everybody. I'm Alix from theStreet. We have a very special morning call for you today. As always, we have Scott Redler, Chief Strategic Officer at T3Live.com, and also special guest Stephanie Link, Director of Research for theStreet and Co-Portfolio Manager of ActionAlertsPlus.com on theStreet. Welcome, everybody. It's great to have you both here. We want to do some technicals, want to do some fundamentals, and find out what the best portfolio is going forward. Question first to Stephanie. We have had a big rally here. Futures are still clawing higher, reversing earlier losses. How much more juice do you think is left?
Well, if you look on valuations, we can go a lot higher. We're still well below the 16, 17 multiple average on the S&P. We're about 13 times, right? So on a valuation basis, we can go higher. In terms of short term, we've run very fast, in a very quick amount of time. So I think that what you want to do is you want to be careful. Earnings season gives you a lot of information, and I always think it's the most fun because you learn so much. So take it all in, see where there's opportunity, and then you can kind of rebuild your positions.
And same question to you, Scott. We've been watching that upward channel here on Morning Call, and I read a note that Credit Suisse says 70% of New York Stock Exchange stocks are now overbought. Would you agree? Is that what the indicators are telling you short term?
We're in a very tough spot because we've had such a methodical move since that gap and go December 20th. I think we were, what, 1270? Yeah. So when you put like a 1270, you put a target for 1320, 1340 for the first quarter of 2012, and you actually hit it in the first 3 weeks or close to it. You're like, okay, what do I do now? Do I increase my targets, or did I have them for a reason, and should I pare them down? So if you take a quick look at the chart of the S&P, you'll see this has been a very methodical move. If you look at just even back from that reversal down in October, technically we've been doing great. Here's a low in October, a higher low in November, a higher low in December. Here's that gap and go that we talked about. This is when a lot of traders reignited or tried to get on multiple positions like me. Then you broke this downtrend. And now since that, we've had a slow and steady upward move, coming into some big resistance back, from the summer around 1315, 1325. So what I think you should watch, or what's prudent, is watch this uptrend. Watch this methodical move that's definitely hugging the 8-day moving average. So if we break this and close below for the first time, maybe then you get your first correction to retest the more macro uptrend that would be a bit lower. But until that happens, if you're fighting this move, you're very frustrated. If you're embracing it, and if you're long and you have multiple positions, you've been very rewarded for the last 3 to 4 weeks.
I think like a lot of people are fighting it, though. I think that a lot of people, this caught a lot of people off guard. So in a way, you might have this kind of melt up before you get the correction you're talking about. And it may be that earnings are actually a little bit better than expected, right? I mean, 7% expectations for the first quarter is what analysts are looking for earnings overall. So I think that, it can easily be beaten. But again, you want to be careful and valuation sensitive.
And talking about melt up, Stephanie, you were saying at the end of December when everyone was saying, oh, no Santa Claus rally, you said we're probably going to get one and no one's going to be prepared. So you were buying when stocks were really low. So then into this sort of rally, what are you doing? Are you just holding? Because I know you can't short in the fund. It's a buy and hold kind of fund. So you're holding and taking profits where you can. What's your strategy?
We are. I mean, I will tell you this. We do have the most amount of cash that we've had in a long time, about 10%. So we're ready if we do get a pullback. We're ready if earnings disappoint, in a few key names, or if, it just sell the news kind of thing. We are ready to buy. But I will say that we've gotten this cash because we have been trimming along the way. That said, again, valuations are pretty attractive. And the economic data here in the States is getting better. China's not as bad as we thought, not the hard landing. So there's some good stuff going on. And Europe is a little bit so far on the back burner.
And then let me throw it to you for Scott before we get into specific names. What are you doing then with your sort of core long positions here? Are you putting on some hedges? Are you going short now?
Well, I tried to hold about 7 to 15 positions since we actually ignited. And I'm typically the best within a rally when it starts. So just say there are 4 quarters in a move like last night's football game with the Giants. Congratulations to the Giants.
I was in bed.
I'm the best from the first quarter, second quarter. Around the mid of the third quarter, I start to leave the ship. I start to get a little hesitant. I start to get a little prudent. And lately, the last 2 days, it's worked against me where my hedges have taken away from some of my longs. but you can't have your cake and eat it too. So you need to know your time frame. For me, I try and be very directional at certain points, and then when things kind of look a little iffy, I pull back. So right now I've pulled back a little bit. I'm going to be more of a sniper, in and out, more of a day trader. So at times I try and use a 1 to 3 day approach, sometimes 2 to 4 week approach. Right now I think I'm more of a 1 to 3 day approach type of guy for a little bit.
All right, perfect. So let's get into some of Stephanie's favorite names in the fund and to see maybe what would be a good trade if you were looking for a 2 to 3 day time frame. First is going to be EMC reporting on Tuesday. We're looking for about 46 cents a share, revenue of just under $5.5 billion. Still about 12% higher from a year earlier. Gross margins 62, 63%. Right? What are you looking for? What's the number one thing you want to see?
I want to see if Thailand really did get the floods really did impact their products, their ability to get pricing, that kind of thing. I think expectations in the low 20s are pretty low. Remember a couple of months ago, we had network appliance disappointed. You had a number of technology disappointing, companies disappointing. These guys are the leader in data, in storage, and they've got 80% ownership in VMware, the most exciting tech story I think that there is out there.
Do you think the Intel news on Friday, though, gave you a happier feeling about the Thailand flood supply chain?
Well, I do. For them, I think that what they sell, it's the priority products, right? So they'll be able to get it faster than some of the other products or other companies that are kind of lower on the totem pole, if you will. So but we want to hear guidance for the next quarter, how long this is going to be problematic for them. But again, as I say, I mean, you have the stock in the low 20s. It's trading at 10 times earnings. 8 times X cash and VMware. That's very, very cheap for a double-digit grower and a leading storage play.
So Scott, let's look at the chart. Tell us what you see there. Are we looking for a good buying opportunity?
I looked at the chart before, and it's definitely not pricing in anything so astronomical. It's at the lower end of the range. It just broke its downtrend. If you take a quick look here, you'll see that it's just coming out. It's not like you're up at these highs where they're expecting a robust report because of some of the misses we've seen in tech. So coming above, breaking this downtrend of like 2260, starting to get above some of these moving averages, so it's showing accumulation. I do think if they just are in line, it's going to move higher. A lot of people were really worried with IBM, including me, because of what happened with Oracle and some of the other ones. Like, okay, what do we do here? IBM wasn't such a blockbuster. It was just steady, and they just had their growth, and the stock was rewarded for not being in Oracle. So I think if EMC comes in just in line, you're going to see some appreciation on that.
And to your point on IBM, expectations had come down, which was quite the opposite than last quarter. Remember, you had all-time highs, and they had a good quarter, but the stock fell. So it's all relative to where your expectation levels are.
All right, so very quickly then, before we move on, what are good buying levels and trading strategies around the quarter, Stephanie?
We'll be buying a lot if it gets hit. Low 20s, we think, again, on the valuation basis, it makes a lot of sense long term. You're double-digit growth, and you're talking about eight times earnings. That's just really too cheap.
So this is one like you're committed to for the year. This is okay.
Absolutely.
You're in, if you were like a 4-tier system, what tier are you in now with EMC?
Well, I would say 2, because we have it's we would be buying it on weakness. I wouldn't be buying it ahead of the quarter, but I think if there's any pullback at all, regarding the technology in general. I mean, technology's been a pretty good group, right? So you just want to be very prudent. But again, I think the long-term trends are there.
All right, let's go to Fluor then. Now Fluor doesn't report till February, but we have competitor Jacobs Engineering reporting on Wednesday. So maybe we can learn something a little bit about Fluor from their report. Stephanie, what are you going to be looking for? What do you want to see out of Fluor?
Well, there's a lot of things, but I will say this. What we learned last week from Freeport and what we learned over the last couple of weeks from BHP and Rio Tinto, CapEx budgets are going higher for capital goods projects. These guys build those projects, right? So you want to look for CapEx, you want to look for commodity prices, and they've been elevated, so we feel good about backlogs growing, orders growing. These guys have the largest order book in the industry. So I think that this is a very volatile stock, and I know it's traded well in the last couple of days/weeks. This is not one you buy ahead of the quarter. This is one you buy, I think, in the low 50s, but I think the CapEx budgets are a floor for this group. No
Scott,
pun intended.
Right.
Pun intended, I think, with that one. All right, Scott, let's go to the chart and tell us what you think here. Is there a good entry opportunity if you don't own the stock?
Let's go right to it. What I like is that the earnings are until February, so the stock could trade, not worried about whether or not they're going to get blindsided with an earnings report. It just crossed this downtrend, so to me that's technically good. It's also above the moving averages right now, so I would say if it starts to get above last week's high, what's this level here? That was about 57. next spot is about 59. That's the last moving average. I do think that, I love when stocks break their downtrends because that means there's a lot more room, and if the capex is getting increased and it could stay above this level, it could continue higher, and then it's got a lot of room back to those old highs. So if you did get it crossing this downtrend, I know you paid up a little bit, but if it proves to be able to hold and go sideways, this thing does look good technically as well as fundamentally.
I'm talking about capex budgets increasing. Metals economic groups that I look at in terms of gold, of what companies are spending, is very much growing in terms of trying to drill for the metals and such across the board, whether it's precious or copper. So,
and it's to the point of commodity prices. They're elevated. They've been elevated for a long time, and that's very supportive of, they get a lot of cash flow, so they have a lot to spend, and that's very bullish for the ENC group.
All right, moving on. Totally different sector. I want to go Stanley Works. I know, Stephanie, you have loved this stock. This is a housing play. Do you think the recovery in housing, though, is already baked into these names, like the Lowe's, the Home Depot, the Stanley Works? Yeah,
when you have, almost everyone talking about housing, housing's priced in. I think that this is certainly a housing play, but this is also a kind of a recovery in construction, just activity in general. But these guys do a great job in terms of making acquisitions, and really what they've been doing recently has been acquiring security and acquiring businesses that focus on oil and gas projects as well, so on the industrial side of things. So I like the housing play, but I also like what they're doing in other businesses. So I'm not a buyer into this quarter as well, because this is also another volatile one, but I do like the cash flow. I love the management team. I think that it's a really good story. So if you get this thing under 70, I would actually be aggressively buying it.
So under 70, Scott, let's look at the chart and see if it can actually get there.
Let's see right now. It's had a really big move. Yeah. Look where it was in October. You had a powerful move up, which indicated another move higher. Then it went sideways, and when it broke above 68, you had to move back to highs. Now it's getting a little choppy here, a little faulty. I do think that you have an uptrend that comes in around 69, so that is below 70. I do think perhaps if there is some kind of down move, that a compelling area to buy to add to positions would be around 66. And if you take a little bit more of a macro view, just want to see what's to the left, you do have a lot of resistance right up here. So in order to get through this resistance, you probably need a little bit of a pullback to gather some steam and then blast right through. But this one has been more powerful than some of the others.
All right, and it's actually reporting on Wednesday, looking for $1.29 a share on revenue, just under $3 billion. Okay, last stock we want to hit on right now is Starwood Hotels, another totally different category here. Stephanie, you have been trimming your positions recently into HOT. Why?
It's had a nice move, again, it is a volatile name, but I do like this story for the long term. It is really a China play. 80% of their backlog is in China, and I think that this company management just spent in July an entire month in China. Just took everybody over there just to kind of see what the business prospects were. I like the lodging market. I think the consumer, the high-end consumer, which is what they focus on, has remained resilient, and I think the corporate customer is coming back.
So meaning we do see some kind of slowdown in China below the expected percentage-wise. It won't be that big of a deal for the high-end consumer? Or
no, I mean, not at all. I mean, there's no product over there. There's no supply being built at all in China, except by these guys. So, there's very little competition, there's very little supply around the globe, and especially on the high-end side. That's the market that I like.
All right, Scott, let's go to the chart and see if you think there could be actually more momentum here for the last little gasp up.
Yes, this too has had a nice impressive move. There are always times and spots to get involved. This was a spot that I think most traders were talking about this thing when it got above this area, broke a downtrend, went above this recent resistance, and now it's like a slow, methodical move. You do have some resistance right around here, coming right into that 54, so perhaps it is a good place to trim considering where it was. But I think that it's above moving averages. It's in the game like a lot of stocks, a lot of sectors. You have bigger resistance right up here. So I would say, let it hold above 50. You have the 50-day moving average right down here. At this point, for momentum, it gets through 54. You might get a quick trade, but I think that's all it'll be, and then it's going to need a rest.
All right, and we're going to have a lot more for you. We're going to have 2 oil names. We're going to have 2 industrial names, so stay with us right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, as promised, we're going to get into some oil and industrial names. First up, industrials want to go to Eaton, reports earnings on Tuesday. Now, Stephanie, Parker Hannifin reported weakness kind of across the board last week. Is that a negative headed into Eaton's quarter?
No, I mean, I think Parker Hannifin, their expectations were quite high. They never set the bar low like every other industrial did. So I think Eaton has the right end markets, aerospace, auto, truck. The valuation is still below its 10-year historical average, and you have a decent yield.
What's your strategy around the quarter?
Well, as we are with most industrials, we're not buying into the quarter, but we're looking for weakness to be adding to.
Now, Scott, industrials have had a really nice run. What are you seeing with Eaton? Is it
This
sort of
one
slowing
actually
down?
was the best of both worlds. It was an accumulate, and there was also a breakout trade. So if you look here at the chart, you'll see this is where you could have accumulated the stock. This was a nice base, nice methodical, and then traders were waiting for it to break above this 46. So it broke above this 46. You actually had a nice wide range bar, so that gave traders some nice bang for the buck right there. Then you had some follow through. Now it's looking a little bit faulty. I would say, usually these type of stocks like to retest these broken trend lines. So I think you could probably buy this one around this 46 area, and that would be a greater, or just a more compelling longer term entry. As far as a trade, I don't think there's a real trade there until it gets back to this area.
All right, the next stock we're going to talk about is Dover. Stephanie, you don't own this for action alerts, but you like it. Tell us why and how you'd be looking to buy it if you were interested.
We do. On industrials in general, we like to have internal restructuring stories or something going on at the company other than just the macro and the end markets. But having both really is a powerful combination. And these guys are very good at what they do in terms of components and smartphones. They make the microphones in the phones. But they're very good at making acquisitions. New management team making a different set of acquisitions. We think that what they have been doing has been very accretive, good cash flow, and kind of off the radar screen for a lot of people.
Just a quick question on that. So you like when there's a little bit of controversy around the stock or name, just because there's some volatility, there's some anxiousness, so it gets it to you cheaper?
Well, I think first, this is not very well followed by the street. A lot of different industrial analysts cover it. Some component analysts cover it. So there's that disconnect. And then I think in general, like when there's a restructuring story, I like to pick that apart and see if there's somebody good running the company and somebody good is running this company, and they're doing a great job.
All right, Scott, let's go to the chart. See how it's shaping up.
There you go, DOV. Take a quick look. It's had a nice little uptrend. I don't think it's been as frisky as some of the other ones, but it's holding it okay. A little bit of a down day on Friday when the market was up. So, I would just be a little concerned if it starts to break this short-term uptrend. If it does, you could easily see it move back down to this moving average. I think traders would like to see maybe it go sideways and maybe get a breakout move above this 62 for some power. But there's no really wide range bars, no real excitable days here. So I think this is more for an investor, not really for a trader.
All right, let's go to oil here. I know we talk a lot about oil services here. I know Stephanie Schlumberger is one of your favorite ones. Reported a killer number on Friday, earnings of $1.11 a share, revenue almost $11 billion. How are you going to be trading it today and repositioning it today? And do you think the stock at some point gets too expensive and its competitors are better?
It's still $20 below its high, so I think that you have still a lot to go. You haven't even seen the international markets really take off just yet. And this past quarter was the first one where they actually saw margin improvement across the board, even in North America. I like this more, though, for the deep water exposure. Deep water markets are getting tight, and that you want to buy ENSCO, and you want to buy this one as well. You want to have the exposure there, but then you also get the international kicker for these guys, too.
And Scott, what do you think in terms of the chart? Is it a good buying opportunity after the quarter?
The stock's been lagging somewhat, and what I like about this, and a lot of traders like about this, is that when it gets going, it gets frisky. And this is one of the stocks that traders do play within this group. And if you look at SLB, the chart, it's actually good that earnings are out of the way because traders like to get this out of the way so then they can watch the price action and not get somewhat blindsided. Look at the size of this channel. Nice channel. It's going to go up against resistance, so it might get a little bit of a pause here around 77, but I think a little sideways action, and traders will have this on their radar for a breakout. Remember I showed you this type of pattern, same type of box in Caterpillar. Remember it was going sideways. It took a little bit of time, but look at the move that Caterpillar had when it broke above this 98 to give you a move to 105. So I think with a little time, you watch SLB, same pattern comes into way, earnings are out of the way. Halliburton was today, and they were pretty decent. So above the 77 with a little time, you're going to see momentum to the upside.
All right, rounding out the oil segment here, I want to go to Conoco. Now, Stephanie, do you think that higher oil prices are baked in from, say, an EU embargo from Iranian oil? Like, is this part of the Conoco story right now in oil prices?
No, I think you own Conoco. First and foremost, it is a great offset to the beta in Schlumberger. It is like the boring, dividend yield, really asset. They're selling assets. They're restructuring. Talk about another restructuring story that I like. And they're spinning off into two. This guy, the CEO, wants this stock price higher. So why not get on board, particularly at 70 or below? I think that that's when the dividend yield is even more attractive. It's the cheapest of the majors in the group. And again, it's a nice offset in terms of, just not as wild of a trading stock. I think the bad news is baked in terms of weak refining. I mean, we know that that's going to be bad. And exploration and production, I think, is going to be a little bit better than people think.
All right, so Scott, under 70, does it get there?
Let's take a quick look. Look at the chart here. The chart, this one also, I don't hear a lot of traders talk about it. It's just not something that people like to trade, I guess, because you said it's very slow and doesn't really give you that much action. But, You do have somewhat of an uptrend intact here. This was the low, and then it's been just moving along nice and steady. Actually in like in a rising channel. It's at the lower end, so if you're looking for value and you want to buy in the lower end, which is tough for traders because we think if it's trading lower like this and showing some relative weakness, it could be prone to a move perhaps to break below it. But at this point, if you're a value person, you have a lot of time, maybe you buy it versus trend. But if it breaks 70, I think traders might be looking to short it a little bit, for a move to maybe 68 or even 66. But if it holds this, it could continue its way back to the upper end. More for an investor with a nice time frame versus, I think, just a trader.
It's also a contrarian call on natural gas because they have a lot of natural gas exposure too, which is probably why that chart doesn't look so good.
Exactly, with natural gas getting crushed.
Right. All right, fair enough. We're going to go to a few stocks, quick ways to make some cash. Let's see if we can get through this quickly. Google, gross quarter. Scott, let's start with you. It was one of your favorite stocks for 2012. How are you trading it out of the print?
Well, right now you have 2 new points of reference. For a micro trader, you have 2 things to trade against. I'm going to show you a quick chart. Here you go. Boom, crushed. I think there was a red flag once this stock came in so quickly after trying to break out. If you guys remember, over Christmas we had a nice trade right here above 636, gave you $30. That was actually my out. And then on this harsh move, I think some people were put on alert that something could be wrong here. Well, now you have it moved lower. Now you have this low here of 581, the high of 591. If it could, do a little sideways work, okay, and just say hold around here, I think traders will be trading for a cash flow trade into this gap above 591. But I think for an investor, if you're looking to get to a tier 2, if you're a macro holder, we could see the 200-day. I think with some patience, it'll be a better, more compelling buy down here. So upside above this area, maybe even look for a cute short, but I think the big money's out of the way if it broke below 581.
All right, investor, Stephanie, interested?
No. I think, whenever a stock breaks, it takes a while to repair. So to your point, let's wait. It's cheap, certainly, but there are a lot of other technology stocks that are cheap.
I just want to throw one more thing in before that, because like Oracle, same type of thing. They missed, got crushed. Look how long it's been taking to repair on Oracle. Look at this lower range. Oh, actually, if you didn't get caught in it, this is kind of the gap trade that I'm talking about, where it can go sideways for a while, and then if you weren't in the mess, above 26, you've had a nice methodical move to fill this gap. So I'm not saying the gap's going to get filled right away with Google, but with a little bit of time, one man's trash is another man's treasure. And right now, if you're not caught in Google, you could get a little bit of a gap fill, but if it doesn't, obviously, boom. There's a 200-day. All
right, 5 stocks. Quick, guys, quick. All right. So Apple reporting earnings on Tuesday. Stephanie, are you trading this at all into the print, or are you going to see what happens
Not
after?
with the run it's had, no way. But I like it on weakness. I think it's a great, a great 2012 product cycle story. One of the best out there.
And Scott, for you, are you taking any options into the print?
I'm not sure yet. I sold my long on Thursday and the rest of it Friday. Got a little whipsawed with the Google footsteps. I think I'm going to wait till about 3:30 tomorrow, see where it's at, and I might do some type of option play. But since the time value is so far off, I might just sit on the sidelines and wait till after the number's out.
And Amazon reports next week. We saw DigiTimes reported Friday that Amazon was going to cut Kindle Fire orders to 3 million in Q1. That's from 6 million in the last quarter. Stephanie, is there any level at all you'd be interested in Amazon, or are there just better ways to play the internet consumer space?
I'd rather own eBay. It's cheaper. It's already reported a pretty decent quarter. Amazon, wait till after the quarter, see what you learn.
And Scott, you have a week to go. Will you be trading this ahead of it?
Yes. Last week we had a great trade. If you look here on Amazon above that 185, you look at this huge move lower after it missed this last time. You had a nice descending channel. So for a trader, when it traded above this 185, you had a quick, 10 points or so. So I would say if it could go sideways a little bit, and hold above this 189, I think there's another trade here, but this is just for traders to get up probably about 200 or so. But for an investor that doesn't want the high beta vol, I do think eBay's earnings are out of the way, and you could get some more bang for the buck.
All right, then we go to Netflix. Now, Scott's the stock has been really killed, right, at the end of last year. So earnings are Wednesday. What are you doing?
Let's see where it's at Wednesday. Unbelievable trade. This is probably one of the better trades we've had this year, from 75 to almost 103, 25%. If you look at the chart here, it's so easy to see. Always so easy to see. But anyway, this is when it broke this downtrend right around 75. Nice move. Tried to go a little bit the other day, but I think that at this point, you have to be a true Netflix fan to be long into earnings. For me, this was just a trade. I'll probably be flat and just wait for the number also.
Big Netflix fan leaves you out, right?
Yeah, I just feel like there's so much noise around it. So many traders, so many hedge funds. Why even go there? You have so many other names out there that you can own, high-quality companies. This one.
Traders go there because there's action.
Of course.
We need some movement intraday.
But you could get hurt that way, especially when you don't know. We don't have an edge on what the quarter is going to be, right? I mean, so you kind of get caught, and I just think too many other names out there that you can own.
All right, I want to go to Microsoft very quickly. Solid quarter reported Thursday after the bell, but revenue and PCs were down, 6% here. Do you want to be bothering with this, Stephanie? I mean, we heard the CEO saying it's a refresh cycle, emerging market growth, trying to put a good spin on it.
Yeah, they have PCs, so I'm not really a big fan. I would much rather own IBM. They're just as cheap, has more cash. They're going to be making a lot of acquisitions, focusing on the right areas in software and services. And that's one I would be focusing on.
Totally fair. And then Scott, how about you? It had a big move that day. Are you going to be trading?
At this point, you have to just let it sift out. It had a great move. If you look at the chart here, it doesn't get much better than this. I think on Bloomberg, I called it frisky, and everyone laughed. But anyway, above 27, you had a nice move to 28 and change. This is a nice wide range bar. You almost have to go to the weekly chart now on Microsoft to take a look at it. But we've been in this space for 3 years. It finally broke out. I do think it's going to rest a little bit, maybe come back to 28. But at some point, it will be testing this 31, 32 area. But at this point, you never want to chase Microsoft after what, a 20% move.
Right,
and very quickly, research in motion, management shakeup. Is this interesting at all now as a trade or an investment, Stephanie?
No, I think they have a lot of problems internally. They got to get that fixed, and I don't want to be buying a stock just on an acquisition or takeout basis.
Right. All right, Scott. And how about you? Did you miss the move already? Is it kind of old news?
We actually last week we were long, and I sold it Thursday, Friday, not knowing that this was going to happen, that it would be up. At this point, the oversold bounce took place. The 14 to like 17 and change. So now it's not as compelling. I think you need just some more time to see it sift out.
All right, fair enough. So rounding it out here, we have a very busy week. A lot of earnings. Fed decision on Wednesday. Fourth quarter GDP first estimate on Friday. Stephanie, what's the one thing you really want to see? The one thing you're going to be paying attention to this week?
It'll be the GDP number on Friday. I mean, I do think a lot of these earnings really they're going to make a big difference in the market. But I think from an economics point of view, to see if we can get this market higher for the longer period, in the longer term rather, you have to see a better GDP number, and you have to see first quarter GDP estimates going higher. And I think given the very lean inventories and a strong industrial part of the economy making a comeback, I think you're going to see a pretty good number.
So you're looking for 3% then for the fourth quarter?
No, I think it'll be better than 3.5%. There's some people at 4. I don't know if it gets
Really?
there, but yeah, there are a lot of people. Yes, certainly. If you look at if you look at the inventory side, you also look at consumer and corporate spending. It's been a little bit better, and also again the jobs numbers have been a little bit better. So I don't think it's going to take much. And the first quarter is only 2.5% expectation. So those numbers may get revised higher.
And then Scott, is it just going to be a day-by-day trading situation for you then, because we have so much data coming out?
At this point, I think traders have been like in third gear trying to be long. Now we're more in like a neutral. Just going to take trades, not fight it, look for a complexion change. If we get a complexion change, then maybe we take a different stance. But right now, the path of least resistance is higher. Like you said, we've had a lot of data coming out, and I think it's been surprising to the upside. People like waiting for something to be like crazy to get that market pulling, but if we don't, we could get that chase to the upside, a chase that's going to be hard for traders to catch. But you know what? Investors that are staying for the long term, they're allowed to get rewarded every now and then. And for a portfolio manager who's long only, at times it's different people's market. Right now, the VIX is low. Buy and hold could be working. For traders, you have to just have some conviction and maybe make your time frame a little bit longer if you just want to stay with it and not fighting it. Because every day someone's calling me, are we ready to short? Are we ready to do this? I'm like, why every day do you just want to be short?
Well, the interesting thing is also, though, last year the stocks were 100% correlated with the market. Now you're starting to see a little bit of a divergence, which I think is very important and very good for stock pickers, long-only managers. That's kind of what we want to see, and we've been waiting for that for a while. So that, therefore, fundamentals matter, economics matter, which to your question, that's why I'm paying attention to the fourth quarter numbers, because I think that is going to be the tell going forward.
All right, that's it for us for today. It was a long show, but it was good. It's going to set you up for the whole week, give you your investor perspective and trading perspective. Thank you so much, Stephanie, for joining us.
Thanks for having me.
I'm Alix Steele for theStreet, and we will see you tomorrow.